Welcome back to the Dividend Diplomats YouTube, everybody. You got Lanny and Bert here, the Dividend Diplomats, and we are excited to talk to you about one of our favorite dividend aristocrats.
Smash that subscribe button, give Bert and I a thumbs up, turn it blue. We're getting close to 2,500 subscribers. We're only a couple hundred away because you know we're about to bring that WWE themed dividend stock analysis video. Who knows what characters that Bert's going to put on and who I'm going to put on? You'll just have to really find out.
We're keeping it close to the vest here. You're going to want us to get there as soon as possible. But of course, thank you everybody for your love and support so far as we've grown our YouTube channel from 0 to nearly 2,500. We couldn't have done it without you, and we can't wait to continue bringing you more dividend news, talking about dividend increases, why we love dividend stocks, and hopefully helping you start your journey to financial freedom.
As Bert said, we can't wait to talk about this dividend stock today. You know, given that the stock market has surged since the election, the S&P 500 is up significantly over the last, almost 10 business days. And gosh, the election really brought in some amazing stock news. And then Pfizer came out with the vaccine news.
That was a huge, huge piece of news for everybody. It's great for the public health, obviously, as we continue the race towards the vaccine, because that's obviously what's most important. But it gave that optimism to a lot of people that maybe with a vaccine, the economy will start humming back to normal, or the new normal in 2021.
Given the post-election, given the vaccine news from Pfizer, the stock market has been on a tear. However, being dividend investors like Bert and I and the Dividend Diplomats and the millions and millions of dividend investors out there, you constantly try to find an undervalued dividend stock to buy, and that's where we come into play.
Yeah, because we don't just buy stocks for the sake of buying stocks. We're not going to tell you to buy something overvalued. We wouldn't tell you to do that with a car. We wouldn't tell you to do that with a phone, with your groceries, anywhere. We would tell you to find that best deal, find something that's undervalued so you can maximize your dollar. So that's where we come in. We've been championing this approach for a while now. Lanny, what tool do we use to find these undervalued stocks?
When I go into the shed, I open the door and I find 3 metrics from the Dividend Diplomat Stock Screener. And those 3 dividend stock metrics, you guys know it. It's the price to earnings ratio less than the S&P 500, that dividend payout ratio below 60%, and dividend growth and the dividend growth rate.
And for the fun of it, in all of our YouTube videos, we even throw in that bonus metric, the dividend yield. We look at it last because we want to make sure it's a great undervalued stock before, but let's be honest, we're dividend investors. We still like to look at the yield and make sure we're getting a nice return on our investment.
And that's exactly what we did. We ran companies through the Dividend Diplomat Stock Screener. We looked at that dividend growth, that dividend yield, the payout ratio, and the price to earnings to help bring you a potential dividend stock to buy right now in the current stock market environment.
And this is where it gets exciting because we have found one. There's one company that the two of us have owned. Some of us,
Bert loves them.
I do love them. I've been buying them over the last month or two.
Bert's trying to get a tattoo of it on the chest, a couple letters, the ticker symbol specifically.
It would work because the ticker symbol is the shortened name for the company. So is it the company name or the ticker? We don't know.
Is it both?
Yeah, but we cannot wait to talk to you about this company and show you why we think this company is undervalued and discuss some of their more exciting business news that they have too, because they have some exciting things in the pipeline for what 2021 is going to bring.
All right, Bert. So after we relentlessly went through our portfolios, because we do love to add to current positions in our dividend stock portfolios that you can find at the link in the description, what industry is this stock that we're about to dive into?
They are a technology giant, and they are specializing in growing their cloud-based business as well, which it's 2020, almost 2021. Operating in the cloud is where you're going to want to be for an IT company.
You want to live in the cloud.
Everything's in the cloud.
We love the clouds.
We do.
You look up, there they are.
Yeah, our data, I just see my data just going right from my phone into the cloud right above me. It's perfect.
It's amazing. Hey, the video right now is probably being stored up in the clouds.
Yeah, I'm sure YouTube has a great cloud up there.
Now, Bert, after going through finding this technology company, should we just let them know what stock we're about to dive into?
I don't know yet, Lanny. I don't know if they're ready to hear about this great company. What do you think?
I'm ready.
You're ready?
Yeah, so let's do it.
All right. Well, if you're ready, that means they were probably ready 5 minutes ago. So, this company, drum roll please. IBM, ticker symbol IBM.
You don't have to write that one down.
No, you don't, because it's going to be everywhere. And those 3 letters would fit across my chest with the IBM. But why are we watching IBM? This company is a revenue and cash cow. They are one of the historical tech companies out there. If you watch movies from the 70s, from the 80s, you're going to see the IBM machines everywhere. It's great.
You know, those large infrastructure, computer mainframe machines that are just from floor to ceiling, IBM. You know, that's what really people still resonate with Big Blue, with IBM.
Yeah, and of course they've transformed and they've become a much larger company since then, but for as long as the computer's been around, as long as every transformation, every major milestone, IBM has been involved in some capacity.
So what's IBM currently trading at, Bert?
Oh, they're currently trading under $120 per share, so just over $116 per share. And that's actually come down recently after some of their news they released over a month or so ago. The company's stock price has fallen and kind of hovered in between this 110 to 120 range. And a few weeks ago, they even dipped it below 110, which is when I grabbed a share or two.
So as the stock market was going up, IBM stock price remained relatively flat in a tight range. So when you look at that first Dividend Diplomat stock metric, that price to earnings ratio, Bert, what are analysts projecting going forward into 2021 in combination with that stock price?
Yeah, their forward earnings are 11.65, so that gives them a PE ratio at their current price of just over 10, which is insanely low compared to the broader stock market, which I believe is trading, over 35x
35,
right now?
36 times earnings. The stock market in itself, on average, is trading at that type of earnings multiple, which is so high.
It is, and yeah, it's high compared to its historical mark. Typically, the stock market's trading between 18 to 20 times earnings, but even then, let's look at the historical mark. IBM's 10 times PE ratio is below that historical mark too. So they are screaming signs of undervaluation at that 10 times PE ratio. The second metric of our stock screener, the dividend payout ratio. Lanny, I think you should talk about this one because this is a very exciting metric here because they fall in a little sweet spot we love.
So we consider the Dividend Diplomat dividend payout ratio, perfect payout ratio, to be in that 40 to 60% range. Now again, to calculate that payout ratio, you take that current dividend that they pay out on the go forward 12 months, divided by, we use that forward earnings. So therefore, when you take the dividend over that forward earnings, you only get 56%, which is in that sweet spot of 40 to 60%.
That's incredible. That is right on the sweet spot of the bat right there. That's where you want to hit the ball, and we use 60% in our stock screener. So this is another big check for Big Blue here as they progress through our dividend stock screener.
And again, the reason why it's a perfect dividend payout ratio is because it shows that there's safety in the dividend. There is sufficient earnings to cover the dividend. But not only that, there's sufficient room to continue to grow that dividend, which is what you want as a dividend income investor, because you want that income to grow. But the other caveat is that not only do they pay out a dividend and earn, but they also reinvest back in the business, which, being in the tech sector, especially IBM with what they have going on, is probably a smart thing for them to have.
Yeah, and we're going to cover some of their major news after we get through the stock screener because it's going to be exciting stuff. So that's an excellent point, Laney. You're going to want some of that cash back to help you grow the business.
Right. So how does a dividend, speaking of growth and having that safety to grow, how does the growth look right now for IBM?
All right, they have joined an exclusive club back in April when they increased their dividend. IBM is one of the newest crowned dividend aristocrats. That's right, Lanny's getting some Hogan flexing over there. But really, this is a major milestone because a dividend aristocrat is a company that has increased its dividend for 25 consecutive years, which means IBM has now increased their dividend for 25 consecutive years. And the company's 5-year average dividend growth rate is over 5% as well, which is very solid when compared to their current yield. Albeit it's a little lower than some of the other tech giants, but that coupled with the yield, which you'll see in the bonus metric, is a nice combo for IBM.
Now, with everything that IBM has had going on, it's come to no surprise that growth rate is going lower. They haven't technically been earning, more money or more revenue. They've always had an interesting play on earnings where they used to buy back a lot of stock, which the reduction in share count keeps their earnings per share metric up. So with that, their stock prices decrease, pushing up their dividend yield, which helps offset the lower dividend growth rate.
Yeah, I think it's an excellent point. So we were talking about the dividend yield. Let's just jump right into this bonus metric here.
Are you going to jump? Are you going to jump in?
Yeah, I'm not dipping my toes into the pool anymore, people. I'm just going right into the deep end.
Yeah, he's going in for it. He's going in for the Swanton bomb from Jeff Hardy.
Yeah, hopefully I don't land the belly flop on the pool because that was going to sting. But their dividend yield, this is what's incredible for IBM. Their dividend yield is over 5.5%. And let's think about that for a second. Tech companies, that's insane. A lot of tech companies don't even pay a dividend.
Yeah. Apple yields well under, I think, 1% probably right now.
Yep.
Microsoft is probably at or near 1%.
Yeah.
So having a tech company yield over 5%, which is so much higher than your high yield savings account and more than likely your mutual fund or other dividend stocks you own. So having a dividend aristocrat yield over 5% is pretty phenomenal.
And not only that, they have a perfect payout ratio that's in that sweet spot that we like to have. So they're not achieving a 5.5% dividend yield by paying out 95% of their earnings. They have, as we've shown, a sustainable payout ratio that still allows them to continue growing and increasing their earnings to continue fueling that dividend growth going forward.
So that was the Dividend Diplomat stock metrics. They have a well below S&P 500 price to earnings ratio at just over 10. They have a perfect dividend payout ratio. They're a dividend aristocrat on the growth streak. Plus, they have a dividend yield of over 5%. But Bert, there's something big that IBM is about to do. What's on deck for IBM Big Blue?
Yeah, thanks, Lanny. IBM has had some major news that was announced last quarter. That's why there were such major changes in their stock price, and it got a lot of investors very excited too. So what was it? IBM announced a major spinoff. They are getting ready to split up their business, and we are excited to feature some of this and describe to you because spinoffs can be leave you feeling a little queasy, but this one we got very excited about when we were reading the news.
Now, they don't just spin in a circle and they go. No, they're going to pretty much split their business model up. When you really think about IBM, you got hard physical consulting infrastructure, and then you have cloud-based service, really non-physical type of, revenue engine. So they're cutting those two businesses down the middle.
Yeah, they are splitting the tag team up, and each one of them are taking their own routes to get that championship belt. But what's really exciting about this is it's going to allow the two companies to focus on their special niches and compete and become giants in their own respective rights. So the first company, as Lanny said, they're going to become the cloud giant. And that's the exciting one because a couple of years ago, IBM acquired RedHat to kind of push their company forward into 2020 and 2021 and compete with their giants.
And just to give you a taste of how well the cloud business is doing and the RedHat acquisition has performed, just in the recent earnings release alone, their total cloud revenue was up over 19%. That is phenomenal growth right there. And then the RedHat revenue that they go into individually was up 17%, versus the prior period. So you have these two growth engines with the cloud and RedHat becoming one separate company right there.
Yeah, and it's a great point. That's where we joked around about it earlier in the video. That's where things are moving. The cloud is where the future is for computing, and IBM is now taking advantage and spinning off this company and really focusing and drilling down on that. And what I thought was fascinating as I was reading a little bit more about this too is they're not going to directly compete with Amazon or Microsoft, who are focused more on some of your public clouds. From my research, they're going to kind of serve corporations and help transition large corporations into the cloud. So they're keeping to their roots of being consultants and working with corporations and addressing this major need as corporations transition into this new wave of technology.
So to bring a little Reza Ramon in this, hey Chico, so are you going to buy IBM stock?
Well, I don't know, Razor. I think, let's think about this for a second, Razor. Let's talk through this. They performed well in the Dividend Diplomat stock screener. But here's my question for you, Razor. How is their dividend going to be after the spinoff? Because that was also a major piece of this.
Are you trying to ask me a question? I'll tell you what to do. No, but all jokes aside, I think their earnings are going to keep growing forward with the cloud-based and RedHat-based business model that I think dividend growth is going to be fine going forward.
In fact, they even talked about the dividend. When the spinoff's happening, the dividend's going to remain the same. And to Landy's point right there, earnings are growing. Why wouldn't the dividend continue to grow between the two entities when it gets split up?
Obviously, that's our take on it. So, Bert, yeah, at these current price metrics, would you consider them a stock to buy right now?
Yes, I would, Lanny. That is why there is probably a good chance that I end up buying a share or two of IBM and continuing building my position. What about you?
I'll add them to my dividend stock watch list. They have great metrics. I need to look at what current portion I have them in my portfolio because I bought a lot, I think, a long time ago as well. So I need to see what my current position is, but they meet the metrics. They're on my watch list. I'm going to keep an eye on IBM and their stock price right now and these next 5 business days to see what the price moves. I'm going to take a look at the ex-dividend date as well, which is obviously the date you need to really pay attention to for that next dividend. So you got to own it before that ex-dividend date. But yeah, I like IBM. I like Big Blue.
Yeah, so there you have it. I'll be most likely buying IBM. Lanny's probably going to be watching it. Maybe he'll buy them. Maybe he won't.
You'll find out.
Yeah. So please let us know what you think of IBM, what you think of them and their current metrics, if they're on your dividend stock watch list. Also, too, what's your take on this spinoff? Are you as optimistic and excited as Lanny and I are about their future prospects? Please let us know in the comment section. We're excited to hear. IBM's obviously an iconic company, so everybody has a great opinion on them and their new dividend aristocrat status. So we cannot wait to hear it.
So what you gonna do, brother, when IBM stock price stays here? Are you gonna ride with the waves? Or are you gonna hunt with the dividend diplomats, brother?
I'm really going to take on my role here as Mean Gene, I think. There's a lot of these impersonations.
Man. Again, if you like this video, give us a thumbs up. Don't forget to subscribe to our channel. Leave the feedback below to see if you're buying Big Blue. We can't wait to hear from you. This is Bert and Laney from the Dividend Diplomats.
Over and out.